I've been managing the fund for the last 22 years plus. And my background before I became a fund manager was that I was a professional violinist for a number of years, and then did a PhD before switching over my hobby and my career to become a fund manager in 1998. And I took on this fund, managing this fund in the year 2000. I'm part of the team that runs it. I'm also the CEO of Amati Global Investors. So I have the job of running funds as part of a team and also helping to manage the business. As a fund manager, every year is really challenging. There's almost no such thing as an easy year for fund managers. Over the 22 years since I've been managing this fund, we've been through some huge ups and downs, the fallout of the dot-com boom, the recession in 2002, Iraq war in 2003, and sudden recovery, the great financial crisis of 2007 to 9, the massive sell-off and forced liquidations of 2008, and then the sharp turnaround in fortunes in 2010, and really a decade-long period of what's been something of a golden age for smaller companies from 2010 to 21. That was an extraordinary period to be a fund manager. Huge amount of keeping up to do with the market, trying to keep focus, keep one's mind on the opportunities, and keep understanding the businesses as they come along. Our investment process as Amati is very much that the fund is managed with a team. We have 5 people in the team. Each of us develops sector expertise so that we can have broad waterfront coverage as we go. So there's no sectors we don't invest in the market. We have a universe of 1,140 odd companies to look at. It's a very big group. A good number of those are really too small for this fund. But between us as a team, we're also managing a venture capital trust and also some AIM portfolios for clients. So we have a huge amount of research to do. We use our own piece of proprietary software to manage our workflow, to operate as a team. We're really growth-focused investors. We're looking for companies that can grow across a cycle. We spend a lot of our time really trying to analyze the quality of companies, how well managed they are, we like companies that are conservatively financed, and the nature of the opportunity that they have, so that we can properly understand the risks we're taking on. We really want to find businesses that can grow through a cycle and grow significantly through a cycle, so they'll generate value over a 3 to 5 year period. A typical holding period for the fund is 3 to 5 years, so we see ourselves as quite long-term investors. We try and bring the mentality of being owners of businesses to buying shares. Generating ideas, they most often come from companies that we've known and monitored for really quite a long time. We're looking for opportune times to own them. We're looking at the long-term opportunities for businesses. All businesses are constantly evolving, and their long-term outlooks are changing. And we're in the business of selecting what we think are the best risks. We do use quite a lot of screening tools on the market, and sometimes ideas might come from those. We have a lot of sell-side relationships in the market, so it could be that ideas come from there. And we've known this universe of companies that we study for many years, so we're very often generating ideas just by noticing what's happening to companies and thinking, oh, now this business looks really interesting, and there's a good liquidity moment coming up. Well, as often been discussed, the market is a very moody individual who's in quite a bad mood at the moment. This tends to be the kind of time when investors get really interested in what's going on, and there's some very good opportunities. We don't think all the clouds are going to suddenly lift in the market. It looks like we're going into a recession. Interest rates appear to be peaking probably later this year. It's less certain what happens in the US. Nonetheless, we think that actually there are some quite big fundamental attractions to the market. It's been very significant deratings. You can buy some great businesses at much cheaper prices than you've been able to do for many, many years. Right now, there is some uncertainty to the earnings outlook, that's for sure, but that's also why the opportunities get created. in the market. So we think for those who are brave enough to invest when the news is not good, as it's not been over the last year, there should be a much more rewarding period ahead. Exactly when that begins to emerge and when you get paid for taking the risks in the stock market, that's always a less easy question to answer. But nonetheless, we're getting pretty keen on the kind of investment opportunities we're seeing at the moment.